Welcome to CSIS Online. The way we bring you events is changing, but we'll still present live analysis and award-winning digital media from our Dracopolis Ideas Lab. All on your time, live or on demand. This is CSIS Online.
I'm Dan Runde. I hold the Schreier Chair here at CSIS. Thanks for joining us. We're having a conversation with David Malpass, the president of the World Bank Group. We're going to be talking about confronting the economic and financial challenges of COVID-19. The COVID-19 pandemic has markedly disrupted the global economic system and daily life, sending countries into various degrees of economic recession. The pandemic has also exacerbated poverty rates and global inequality. Half of low-income countries were already in economic turmoil and at high risks of debt distress before the pandemic, only to be overwhelmed by the economic contraction caused by both the pandemic and the health measures used to contain the virus, e.g. lockdowns, limits on movements, etc. The international community and the United States will have to take concrete actions to help lower income countries manage the economic consequences of the pandemic and provide assistance with debt relief in order to prevent future impediments to development efforts and further financial and economic distress. I'm so grateful to have David Malpass, who's doing a great job leading the World Bank Group and is taking on these issues by the horns. So I'm really appreciate, David, you being with us. Thanks so much. Can you talk a little bit about the World Bank's efforts on let's start with vaccines, because I think we're not going to get out of the health crisis until we deal with, the economic crisis until we deal with the health crisis. And in some ways, we're in an economically induced, it's a health-induced coma, if you will, that only will be solved when we have vaccines. And so can you talk a little bit about how the World Bank is, what its efforts are around COVID-19 vaccines, David?
Hi, Dan, and hi, CSIS. Good to see you. So if we go back to April, or March, the pandemic hit, and so what the World Bank did, what we did was fast track could get things like masks to people. As we got in summer, it became clear vaccines were going to be possible. There needed to be a system to deliver those to people. So in the past forward a $1 billion package that would enable vaccination systems for countries that otherwise wouldn't have access. That was the goal. And so that might be the healthcare providers, that might be the people that are vulnerable, meaning older people, people with comorbidities. And so those systems are now being worked out. So I want to just bring you up to date. After going through the board, then what we're doing now is very rapidly doing an assessment of the countries and their ability to deliver vaccines. And that shows the weak points in their systems. That might mean that they don't have health care people that can actually do vaccinations, or they might not have a cold chain. You know, it's all the elements. And it also gets the countries to think about what they want to do. How do they want to do it, and how are they going to choose who is most vulnerable and needs the vaccination first? And so we're in that process. We hope to have 100 countries done now. We're completing those assessments, and also at the same time then using the fast track approach that was set up in April to begin that process with the board. So we'll be bringing operations to the board. I wanted to give you really the background because it's a lot of money, and we hope it might be able to vaccinate up to 1 billion people who wouldn't otherwise have access, because as you've seen in the press, the advanced countries are doing it differently in terms of buying access. But what we think is a critical part of our approach is that it's holistic. It goes through the range of activities that countries need to do, but it also is based on the individual needs of each country. So we have a unique program with each country as far as how they want to buy the vaccines, how they want to deliver the vaccines, and with the standards that the World Bank can supply. We're working, because the World Bank had been very involved in vaccinations over the years and even over the decades, whether polio or measles or Ebola, the personnel understand the systems, and the countries can work with the World Bank on it. So the goal here is to have systems up and running and a direct purchase that goes from the country maybe to the manufacturers. Some of it might go through COVAX, but the critical thing is quickly getting the vaccines to the people that are most in need in countries that otherwise wouldn't have access.
Yeah, I think this is going to be an enormous logistical challenge. There's going to be an enormous planning challenge. These are the sorts of things the World Bank is quite good at, working with ministries of health, thinking about logistical issues, planning, in addition to helping with the financing of vaccines. As you said, I mean, some of these vaccines require a minus 70 degree Fahrenheit temperature. And it's quite difficult to just doing that in the United Kingdom or doing that in the United States is very, very hard. We have not created such a thing even in this country or in the United Kingdom where they're beta testing it. So all those issues, or do you have the right kinds of folks to actually inject the shot? Like, these are all the complexity of doing this is cannot be underestimated. So obviously the World Bank's a really important partner in all of the whole chain, if you will, from making the vaccine to getting it jabbed into our arms.
Exactly right. And a different country, add to that different countries are at very different stages of, or which parts of the system do they have. But that's within the capabilities. We use consultants for some of it, staff on the ground. We've been, one of the things that I did when coming into the bank, and it was, it was going on already, and we've pushed it forward, is the alignment of staff to be closer to the clients. And so starting in 2019, we began to put more emphasis on the country office driving the program. So, and that's a recognition that there's so much difference between what each country is. Even if they border each other, they may have a quite different system of government, different personnel, different challenges. And so what we want to be as an institution is very focused on good development outcomes for each country, and with the country programs that drive that. So we draw on the global knowledge of the bank. So for example, in the area of vaccinations, there are assessments going on country by country, driven by the country team, but working very closely with the health experts. So kind of an expert group that may reside in Washington or in Europe, but are in daily contact with the country programs themselves.
One of the other things that I said earlier, that this is like we're in an induced coma economically and financially, and the inequality gap between poor and developed countries continues to widen, and medium incomes in the developing world haven't been rising, especially compared to advanced economies. And so the COVID makes this even more complicated. Why and what can be done about that?
Yeah, this is a big challenge, and I think it's a challenge for the economic profession and the finance profession. After the 2008 crisis and into 2010, 11, 12, there began this process where central banks buy assets, largely bonds, starting with government bonds, but now doing also corporate bonds and a range of bonds, municipal bonds, and so on, mortgages. And so what that does is it adds to the price or the value of assets that are largely owned by people with higher incomes. And so the stimulus programs are adding to that, call it inequality or the rise in asset in wealth of people that already had assets. So one of the big challenges for the world is how do you create systems where people that are poor can build assets? Maybe that, and an asset should be broadly construed. It might be their small house, but it might be just an education. That turns out one of the most valuable assets that people have is education, and a second is an actual job. If you're employed, that's very much like an asset. And so creating more of that for poor is a critical challenge. And frankly, it hasn't been happening for much of the developing world. This year, we see poverty actually going backward, going up, which is very disappointing. The first time in 20 years that has happened, meaning people going actually in reverse. And so trying to turn that around is the biggest challenge. We can recognize everyone lives on the same planet and has to move forward together. That's vital, and it has to be done through cooperation. But once you've established that, then how do you do that in Nigeria? How do you do that in South Africa, in Kenya, in Ethiopia, in South Asia, and around the world? That challenge. Well, Latin America, obviously, the same urgency for the world to see people going forward in each of these countries. I think and so the way we're tackling it as a World Bank is, one, we talked about vaccination. That's going to be important. And for the advanced economies to reopen, that's vital because they provide a lot of the markets and the income growth that's needed for the poorest countries through remittances, through exports, and so on. But then in the countries themselves, how do they create a system that allows people to adjust to the post-pandemic world? That's really what we're occupied with.
Well, I think that's excellent. And I do think we've got this emergency, and you're confronting the issue with vaccines, but then we've got sort of these economic and financial effects, but also there's some questions about what are the kinds of policies that governments need to enact. I'm all in favor of the direction that you're describing about creating assets, creating opportunity. I was struck when I worked at the World Bank Group, but we don't appreciate this in the United States, in Washington, how important and how influential the World Bank is, the regional development banks are, some of the specialized UN agencies. They have a special kind of influence. They have convening power, you have expertise, you have research, yes, you have money, and you also got the ability to have trusted relationships with these governments. Could you talk a little bit about how the kinds of conversations you're having with your shareholders who are also your partners in developing countries? How about the kinds of policies they need to kind of go in this direction that you're describing?
Yeah, and there's some limits to what people can talk about because it becomes sensitive in the countries. As you talk about shortcomings in a given country's program, that makes it harder for them maybe politically to actually make the changes. So I'll talk a little bit generally, and maybe we can do some countries. So the dialogue is unique, somewhat unique to each country. There's some general principles. So let's talk about those first. One is that as we're talking about economic development, some part of it, you have to talk about money. So the exchange rate becomes important in countries. Some countries are still using dual exchange rates, meaning one group of people gets a foreign exchange at one price, and then other people get it at a different price. That creates a huge amount of inequality within a country. So that's a starting point to try to have a unified exchange rate where there's not preferential treatment to one group or another. So, that's a starting point. And many countries are doing it properly in that regard. And I guess I'll say, as you look at Mexico, it has a market-based exchange rate that allows a long yield curve, and that allows capital formation. There are other problems in Mexico and challenges, but it looks like that part of it works. The G20 recognizes this in the communique. There's a specific provision that's been in all of the communiques since October of 2017, saying that stable currencies are important to growth and investment. And you've seen around the world relative stability in the major currencies since that point, and it's a principle of growth. So I don't want to belabor it, but I think it's key. And we do have some big developing countries who aren't doing that, and I think it holds them back a lot. So we work on that. Trade, of course, is very important for all the countries. A starting point is trade between towns, but it also goes to trade across borders is one of the biggest enabling factors for economic development. And again, countries have understood that and made progress, but there's still a lot of borders, thick, but sometimes people call it thick borders, where you can't get your truck across the border. Women can't cross the border with trade goods, so that's a blockage. And so if you can explicitly address those and bring them down, one that we've tried to work on but not made progress, Nigeria has a big tariff against Benin, its neighbor, on rice. So it holds up the price of rice in Nigeria, but it means the farmers in Benin are not able to access, and that causes friction in other areas. And it's done through, in this case, through I think a very high tariff that is a blockage to trade. And you could go around the world and say, can we make progress? We've made some progress, and we're happy, though it's a difficult region. In the Horn of Africa, Kenya and Rwanda are making progress, and that allows trade liberalization in those areas. And you can look in Central America, there's a trade agreement between Honduras and Honduras and Guatemala that is operating, that has harmonized the way the bill of lading goes across, and that allows people to trade goods, and that creates value because of specialization. Remember, at the core, that's so important that people be able to do what they're better at, and then their neighbor can do what their neighbor is better at, and that creates value rapidly. We could go through, let's do a couple more. Yeah. One is the issue of vested interests. So if we look at the agriculture sector around the world, it's very important for development, because people grow food, and that's the starting point for economic development, but the markets are controlled in many areas. For example, fertilizer markets are controlled because some big maker of fertilizer doesn't want other entrants into that market. And they usually don't have the right fertilizer, the best fertilizer for the farmer. So and it's also bad from the climate sense and the runoff sense. Meaning you put the wrong fertilizer on, the rains fall and it just washes the fertilizer into the ocean, and it's bad for the environment, for the climate, and for the economy. So if you can fix that, that's good. So in Kenya, we've had some success with a voucher program. So the farmer, rather than going to a state-owned warehouse to buy controlled fertilizer, they can use a voucher to buy fertilizer that is appropriate for the seeds that they're using and the humidity of their soil. It's going to be different than people in other parts of the country. In Ukraine, we've had some success in trying to get them to allow fertilizer in from their neighbors to the west, because they've been used to buying fertilizer from their neighbors to the east, and that becomes an important part of the yields in Ukraine. in Pakistan and India, these issues are both very important. And the agriculture in general, the subsidies for the wrong crops that might use too much water and therefore end up being very bad for the climate and for the sharing of resources within a country. The advanced economies are notorious on this, and it's been hard to get them to break out. And if they can't do it, how does a very poor country where the agricultural interests have political control, how do you break through that? And so I'll take a break, but those are some of the challenges, and I named some countries but we could talk about that. Kind of every country around the world has its own unique problems that are actually substantial in blocking how they can develop.
Do you think that that COVID, because of the disruption, in some ways it's throwing all the chess pieces up in the air? Does it create an opportunity to take on some of those challenges that were there before COVID, if you will?
We've tried to do that, and there was actually a process with our board in May that we called it the approach paper, and it was kind of how do you approach this pandemic, so we looked for some principles, but they've been hard to push forward. One was, we really want to get cash or other kinds of support to the poor. So that's a social safety net. So we wanted to amplify the social safety nets around the world. That's been a challenge. We have some that we've been able to expand, but there are obstacles, either technology or in many cases the registry of who gets the benefits has been hard to maintain. And so there's not a distribution system. Even if you want to give money or food to the poor, there's not a way to target it and to keep it, to actually get it to the people that need it most. Another type of thing that we tried to do as an opportunity through COVID was, at that time, oil prices had fallen substantially. So it was an opportune time to reduce the subsidies that many countries have for gasoline prices and for other, in some countries, the industry gets a subsidized price for the oil that they use. That's bad for the climate and bad for the economy because it distorts markets. So we tried that, and we're still working on all of these things. But often, then the industries that would be affected through paying a fair price for the inputs object to it, and then that creates an obstacle. We push pretty hard, but during a pandemic, a crisis like this, we really want to get money to the countries. We're looking at a situation where we want resources. There can be some indication that the people will benefit from it. That takes me, and I'll turn to you, but the debt crisis has been a challenge, because you can identify countries where the World Bank would put in resources, but all of that would go to creditors and none of it to the people. That's not a fair balance, and we're trying to work on that.
So David, if the global economic crisis is not treated, what consequences lie ahead, not only for development, but also for regional and global financial systems? Because it seems to me that the economic and financial crises are interlinked, and I worry that we're going to have a domino effect here of banking systems and other things in trouble the longer we're in lockdown.
Yeah, for one, this truly is a once in a century or more than that kind of crisis, where people don't know what the consequences will be. And it's a different crisis from previous ones in the in the inequality side of it, but because the advanced economies had a very powerful system to stimulate that was transmitted through government programs, it meant that people that weren't in a government program, maybe informal workers, for example, were left out of it. One of the things we've seen in developing countries is remittances go down. So workers from poorer countries that cross borders, maybe just to the neighboring country where they can get a job, they used to send remittances back to their family. Those have fallen a lot. So there's a cash flow side of this that's been cut off now for a long time, and it can be intra-country. Some countries that are big enough where people move to the city, send money back home. That stopped because the informal jobs disappeared, and those are hard to measure. We do what we call a pulse survey, where there's actually phone calls made to say, is there someone in your family who doesn't have enough food? Over time, if you do it the same way over and over again, you get very good data because you can see the change that's going on in countries. And those are still showing the pressure from poverty, and in some cases, extreme poverty that shows up in the food insecurity kind of system that we're worried is going to get worse as we go through the next few months. Until the advanced economies can really pick up the pace. So, Dan, I don't know how this, one concern that I think people should have is that it was one thing to have a pandemic that lasted for 3 months or for 6 months. People could draw on the little savings that they had and then hope to look beyond it. But as we now get to the worry that we're talking about a 1-year hiatus in economic activity, and as the pandemic goes on, because it's going to take quite a bit of time for the vaccinations to take hold and the the reopenings to occur. So in the meantime, you have banks that had initially been recording it as a non-payment of a loan, with a government, the government changed the regulation so the bank didn't have to call it a non-performing loan. They could call it a COVID grace period. So by legislation, you turned what was a bad loan into a grace period. But then once that runs out, it in reality is a loan that's not going to be paid. So some of the banking systems will come under pressure from domestic debt. And I think it's too early to, all of the signs are that the inequality, some people call it a K-shaped recovery, where the more advanced can go up, but some of the poor nations still going down. So that's what I'm worried that that's still the situation that we're facing. So our goal, urgency for each country to find a path forward, and also for more resources to be available from the richer countries to the poorer countries.
You've been very outspoken through the G20 process, through a number of your op-eds, through the communiques of the G20, along with the managing director at the IMF on debt burden relief and debt relief. Could you talk, what are some of the specific steps that need to be taken by the international community, the United States, and maybe and your partner, our partner governments for the World Bank? What are the steps that need to be taken on this debt issue?
We did a big report a year ago on that there was a wave of excessive debt, and it noted where that debt came from. It's different from debt in the past. In the 1980s or 1970s, really, there was what was called petrodollar recycling, that there'd been a rise in real terms in oil prices, and that was accumulating, and then that wealth creation was recycled in the form of bank loans, largely to Latin America, but to others around the world. So that was one type of debt crisis. This one was, there were two new sources that developed in large size over the last 10 or 15 years. One was the Eurobond market, and the private sector investment that was funded by mutual funds, by hedge funds that built on the idea that if you could have diversification in your portfolio, you could make a lot more loans. And so those loans went into even the poorest countries and a range of developing countries. It looked like a good asset class, and the amount of money went up, and it probably gave good returns. And then China came on as a major lender. Our data that we put out in maybe September or October, called the IDS, the International Debt Statistics report, showed that of the official bilateral creditors, so that's all the different credit agencies of the governments around the world, 65% of that debt is owed to Chinese creditor agencies. And the second biggest is Japan with 15%, and the other ones are smaller. That would be France and the UK and the United States and so on, even smaller than that. And so that gives you some sense of the shift that if you had done that same statistic 10 or 15 years ago, it would have been completely the opposite, where the G7 countries would have been the biggest creditors. So they could form as the Paris Club and reschedule debt. But China's not a member of the Paris Club. So one of the challenges that the G20 faced was how to get a broad effort to give debt relief to countries that were over indebted. The initial step, and I called for it, and Kristalina Georgieva of the IMF called in March for just let's stop collecting the payments for a while and then
2
look
years.
for the next step. So that started, but unfortunately, the private sector creditors didn't want to do it, and they couldn't form as a group. They were the goal had been for them to form some clubs. There used to be a London club that was the private sector creditors would see that it was in their interest to have an organized process rather than a disorderly one. They didn't do that and still haven't, and that's been frustrating. And then while China said that it was and is fully involved, they didn't have a process to get all of their big creditors. These are individual agencies within China. So there's one called China Development Bank and one called China Export-Import Bank, one called CIBC, and so on down the list of their creditors that are each one individually very large. They didn't have a mechanism to work together and take into account the new reality. There's a couple of things going on in the world. One is the pandemic hit, so the viability of various debt has to be reassessed. And then secondly, interest rates have gone down a lot. And so some of the creditors are still charging a high interest rate, not reflecting the current reality. So this gives a challenge. So the G20 addressed that during the summer, lots of meetings, issued a communique in October with the Leaders Summit saying that they would have a common framework for addressing the debt. So now the challenge is to apply it in a way that really provides enough debt relief that the country can see light, and the people in the country can see that there's a future for them in that country, that there's light at the end of the tunnel. So that's the process that we're in now. Various countries that are tackling this in various ways. But I think the reality for the world is there needs to be more resources freed up for the poorest countries. They can't keep paying these high interest rates to creditors that are better off than much better off than they are. So there's got to be a fair burden sharing in terms of reducing the flow of resources and also the overhang of the debt. I think a critical thing that for the creditors to understand is that it's going to create a better future for them as lenders if there can be if the poorer countries, that's the bottom 75 countries in the world, these are IDA countries, if they can get through the debt crisis and then have more growth into the future, that's going to be better for everybody, including China, the private sector creditors. This is going to be an opportunity for future growth and future loans, and also future investment projects in these countries. But if there continues to be as much of an outflow, then the countries won't be able to get back on their feet.
Let me just, I've had 500 Zoom calls since March 15th. I feel like I'm like global services on Zoom or executive platinum on Zoom. I've had several big takeaways from all these conversations. One is that I think there are going to be tectonic shifts in global supply chains. To all sorts of just some of the disruption is going to be shifts in global supply chains. So I'd love for you to talk a little bit about that. The other thing I want to talk about is there's been more e-government, e-commerce, distance learning. I think we had a conversation about this when I mentioned this to you when we saw each other a couple of months ago. The e-commerce, e-government, distance learning, and digital payments in the last 34 weeks than in the last 34 years. I think if you want to be part of modernity, you're going to need to have literacy, drinkable water, toilets, electricity, and then access to high-speed internet. And publics are going to demand that, and it's going to be provided through the state or through the private sector, through OECD countries or from non-OECD countries. But this digital demand is just, we talk about digital transformation. This is digital transformation. The experience of us doing this Zoom call is part of that. So could you talk about trade and sort of the tectonic shifts in trade flows and how you see that? And is there, in my mind, aid agencies like the World Bank and advisors like the World Bank are sort of like grease the skids of some of that coming? And then in the case of digital, could you talk about how you're thinking about digital? Because it seems to me just shifts in trade and digital are some of the economic related issues beyond debt and beyond sort of the immediate emergency of COVID that I think are going to be some of the lasting changes because of the COVID crisis.
Yeah, absolutely. So on supply chains in general, I mean, clearly one of the things going on is that over the decades, the supply chains with China became non-diversified, and so one of the things the world is doing is a reasonable diversification, or call it a shift to have supply chains, and that may also mean that China has bigger supply chains with other countries. If you think about where efficiencies come, triangular trade is a really important one of that. So that gets a lot of attention, but I think it needs to be different sector by sector. Some sectors you don't want a diversified supply chain because there's a huge economy of scale from the volume that you produce. Other ones you want that, and so the world will gradually figure that out. It's expensive at first because there's all the shifts going on. So that's one issue, and that becomes very important. If you look at the countries around China, they're providing or offering substitutes for the old supply chain, and then they look for efficiencies in terms of how they do that. My sense is that's going pretty well because it's decentralized. Each individual private sector company that was used to sourcing maybe a single source now looks for multiple sources, that kind of thing. And that's going to put a lot of emphasis on intellectual property, rule of law, WTO considerations, all of that going on the grand scale. In individual countries, it plays out because if you think about Mexico and the US, they're sorting out auto parts and where the most efficient way to do that is. And with Canada, and same in Europe with Brexit. So those are, I think we have to recognize huge shifts going on in the supply chains in order to find efficiency within the geopolitical system that we're in. Now, your point is really good about e-government, but I don't love that phrase. It's the idea of efficiently using digital information and internet capabilities And even the poorest countries are finding they can get efficiencies from turnkey systems that you install them, and they save in terms of you know what, I'll make a plug for trade facilitation. One of the most important things, or a very important thing for economic development, is to quickly get things across borders. And so if you can email the bill of lading to the other side and they accept that email and then can check it off as far as the truck or the train coming through. And so some countries are, you know, reducing what used to take 10 days to 10 hours. Where that happens, it's got huge economic efficiency gains that can come, and oftentimes, you know, some computer system or digital process is at the core of making that happen faster. So we need to help that. And you're right, you need high-speed internet. But can I make a plug? You know, it's a spectrum of technology, and you get a lot of gains just from going from. So one problem that still exists is you know, while some countries are talking about 5G or even 6G, some countries are still in 2G and 3G, and they can't get to 4G because the cell towers, the laws don't allow the sharing of cell towers. So I'll name one. You know, Nigeria, we're working, it's really important. This is a lot of people, a big nation that needs to move forward more quickly in the 2G, 3G, 4G, and is hampered by the way the system, the backbone of the system is set up. And and so I guess the point I wanted to make is different parts of the world have quite different problems. You know, Google is running a fiber optics down the West Africa that will allow landing spots that will really enhance. But then you need to have that landing spot allow some open access so that there can be competition of the independent service, the ISPs, as they connect. And so that means some kind of regulatory framework that's set up on the idea of competition. And that'll be very important because that side of Africa is underserved from the standpoint of so we're not at the point yet of, or we can hope for high-speed internet access for everybody, but I'm happy, I would be happy to just get incremental changes. In the meantime, we should recognize that satellite technology will open, you know, I think people will be talking about leapfrogging within the telecom space as new technologies open up. So you may not, you know, right, it's unclear how the world will go as far as fiber optics versus other kinds of techniques. And so what I think we need is regulatory environments that allow change to occur pretty rapidly. Bottom line, I think
we can't get a regulation is not going to get ahead of technology. Technology is going to be far faster. So we need that flexibility that you're describing.
Yeah, and so a bottom line, we could measure some of this. I mean, one thing that I think is really important is high volume, very low cost digital transactions. So if you come back to money, you know, I said early, money at some point,
you got to talk about money.
You got to talk about money. And so having costs that are for individual transactions, teeny tiny fractions of a cent. So because your goal is to have, even for a small, poor country, let's try to have 10 billion transactions going on at a tiny fraction of a cent. That means that poor people are getting access to money, which is very important. We haven't talked about, you know, social welfare and benefits and climate.
Yeah, let's spend a minute on social welfare and benefits, because I think as you move up the development curve, David, countries need more sophisticated and well thought through social safety nets. It's part of modernity. And even some of the world's poorest countries have social safety nets, a lot of them designed in partnership with the World Bank Group or regional development banks like the Inter-American Development Bank or others. So how are social safety nets being impacted? Because we need social safety nets. How are they being impacted by COVID, or how are you all thinking about social safety nets in this context, or or in the digital context?
Uh, they're important, and they're one aspect of how do you raise people's true living standards from a broad sense, meaning nutrition, meaning health, meaning climate awareness, and so there's a range. So I mentioned earlier, and I don't have too much to add, that social safety nets, where you can deliver either money or in-kind benefits to people, are really important in this system, but it's been hard to expand them in COVID because the people to do the expansion are maybe not available. The technology wasn't there that that could add to it. So we have we've added a lot of money in individuals. So we've been able to add money in Brazil. We've been able to add money in Jordan. So some of the Pakistan is coming on with a stronger system, one that where women can get access to and keep amounts of money, which then is very important in terms of the family's choices on education and on food. One of the best things is if the woman controls it, not the man, unfortunately.
It's just the truth.
And
It's just what it is.
Truth of the world. And so finding a system where that can happen is good. So I want to come back though to the broader issue that as countries get more freed up some fiscal space, they have choices then on how they can spend it. We're monitoring that as part of the DSSI, the debt suspension initiatives that started in April, and so and that helps country, or we need to find ways that as governments have more money, that there's a connection between the people having more benefit, a better living standard, and so that's, and one that takes into account, you can think about what's going on now as countries seek to meet their NDCs under the Paris Agreement, that you want to, they want to have NDCs, but often those were set, or too often they were set.
These are the goals that each country set on the Paris Agreement. Each country got to set their own goal on carbon reduction.
Right. I'm sorry. NDCs, nationally determined contribution. Yeah. So, and the countries decided on that, but it was kind of a political process in countries where where vested interests had some say in it. And so aligning that in a way that succeeds, or that achieves what you're trying to capture, which is maybe a reduction in greenhouse gases, let's say, if that were at the core of an NDC, then how do you do that in a way that that's consistent with development in the country and that maximizes the impact that you're going to have? And so those are challenges as the gearing up occurs for more action on climate. So we're looking for ways to have the connection between social progress for the country, economic progress, and climate progress all can come together.
Tell me about, we got several questions from the audience I wanted to share with you, David. One is, debt relief sounds like an enormous task. How will the global financial community handle large-scale write-offs?
And so write-offs is a loaded term. So if you think about it, if you've got a loan that's earning 7% at a time when Europe has a lot of negative interest rates, it may not be, if you've got some choice in the instruments, you might be able to have a much lower interest rate and not call it a write-off, call it a debt relief, debt reduction. After the Latin debt crisis of the 80s, there was the Brady plan that had a menu of options. So there were different ways to provide the relief, and different creditors chose different ways. So I think so that's one observation that for the private sector creditors, there may end up being a different solution for syndicated loans, bank loans, than for Eurobond kinds of debt reduction. One challenge is how do you avoid the litigation, the extensive litigation that has been associated with Eurobond restructurings, and so Ecuador went through a restructuring earlier in the year. It was, well, just a few months ago, really, and it reduced, but China's creditors stood apart from it and didn't participate. So a challenge is how do you bring together most of the big creditors into a group, and then a different group is the official creditors. The good news there is they have a lot of debt owed from even the poorest countries, but they in general have pretty strong balance sheets. It's a different kind of crisis from some of the ones in the past, in that the banking systems of the advanced economies in China are stronger than in the past, and the government agencies are under less direct pressure because the fiscal stimulus is so large that's going on. So there's not a direct answer. There's kind of a case by case approach going on right now. We've seen Zambia fall into default. So there's a specific question of what can be done there. Angola and Ecuador and some other countries have looked for ways to do debt restructuring, and they find different pathways to get to the end point, which is enough debt relief that you can call it sustainable at the end of the process. That what I think we should try to avoid is the idea of doing a little bit and then having to do it over again. It's very costly to the people of the country to live through one of these restructurings, because the government takes control, takes resources from people in order to make it work. So I think the goal of the world should be to try to have a deep enough debt relief early in the process that the country can begin growing into the future.
Another question is about the role of China and debt and its role in this debt. You've made some reference to it, especially in the context of Africa. Could you talk about how China has been operating as it relates to Africa and in the context of debt relief?
There's been, so China, as it made immense progress economically in the 1990s and into the 2000s, began looking for markets abroad and interaction abroad. One part of that was to get resources back to China for their industries. So that maybe grew into what was originally called the One Belt, One Road system, and now is the Belt and Road Initiative that was part of was really a composite of many projects that China's various agencies were involved in other developing countries. So the financing for that, so there were various contracts. One was the construction contracts themselves, and then how were those financed? So oftentimes a Chinese financial institution would finance construction that was done by a Chinese construction company. So that leads to, and what I've strongly encouraged is more transparency. If people can look at the contracts, they can understand better what the upside and what the pitfalls are from those contracts. If you can't see the contracts, you don't know what the purpose was, what the connections between the various participants are. So in general, when a government gets into a contract, it should make that known to people so that they can understand better what the process was. How was the project selected? How were the financing agents selected? So we've encouraged the transparency, even including in the oil market, including in the resource market. So, some of the big players in commodities still don't make public the contracts that they're entered into and the way collateral is used. So think of a challenge. If a government that's going to be in office for 2 more years or for 4 years, which it does happen around the world, enters into a contract that commits the country to delivering commodities for 10 years or 20 years, which does occur, the contract runs much longer than the political life of the country's system. So there's an inherent conflict of interest or difference of position in that kind of relationship. So I think it's really important that there be a lot of transparency in those contracts. And we also think that collateral, that's where the country commits actual physical product or some control to go to the lender. Those are not so appropriate for sovereign governments to get into because they don't really. Why are they able to commit the people of the country for so many years? That's a challenge. So we're trying to move to a system that is less reliant on collateral and that is more transparent than what we have right now. And that applies around Africa, your original question. But it's really a global, I think it should be a principle of lending in these sovereign relationships, both to developing countries, to poor countries, but including to more advanced economies as well.
David, we're coming to the end of our time. I wanted to give you a chance to give any closing thoughts. Is there something you're optimistic about in 2021? Because gosh almighty, the world is such a mess. I'm so glad you're at the helm of the World Bank. I'm so glad that Kristalina is at the IMF. And I'm so glad we have the system of regional development banks to kind of help the system kind of as a shock absorber. So I'm very glad you're there. And I'm so glad the World Bank's doing what it's doing. Can you leave us on some positive note about what you're optimistic about in 2021?
Well, maybe what we were just talking about, we need, the world needs a lot of investment, and especially the poor countries need investment in infrastructure, for example, and in building things. And so the good news is there's a huge amount of savings in the advanced economies that's willing to go into investments at a very low interest rate. And so what an opportune time for the world to build lots and lots of things, and including climate-friendly transformations of agriculture systems, for example, and a range of sound projects. I think those can be done if you have transparency at the core and then begin to standardize the contract so that there's not so much fine print within the contract that then investors will look at it and say, boy, if I can get that same kind of contract and see it in 5 different countries, I've diversified my risk, and I'm willing to put more money lower yield. So I'll give you the optimistic thought that long-term interest rates have never been so low at a time when the needs of the developing world have never been so great. And so if we can work to get there, I think we have to have a debt relief process that bridges the two. Otherwise, the chasm in between those is too deep. You can't get from one side to the other. But if we can have debt relief and then identify good quality projects and do it transparently, then the financing will materialize.
Okay, so we just got to stay alive through 2021, and we can get through 2021. We're going to have the the next decades about this challenge of financing infrastructure, both hard infrastructure and digital infrastructure. And you all will play a central role in that. The World Bank will play a central role in that. Thank you, David. Happy holidays. So happy to see you. It's great. I'm so glad you're at the helm. Thanks for taking time to be with us at CSIS. And please thank all your colleagues at the World Bank Group for all the important work that they do.
Super, thanks, and hi to everybody. Glad to be here. Thanks.
Thanks, David.
Bye.
Okay. Bye.